The following is brought to you by GFL Ag. Next thing you know the next thing. Next is Now is a short podcast discussing agriculture's emerging next-gen tech and trends as they're happening in our industry. Next is Now, presented by GFL Ag. Listen where you get your podcasts today.
Bernard Tobin here at the Grain Farmers of Ontario March Classic, London, Ontario. Catching up now with Shaun Hackett. He is president of Hackett Financial Advisors. Shaun, how's it going?
We had a great conference, a good speech. I'm just grateful to be here.
Now, your focus, you're a meteorologist, market analyst, and we could talk about these topics forever. A great presentation today. You talked about non-weather related cycles and weather related cycles, right. And how it all ties back to commodities. Let's talk about those non-weather related cycles. You kicked off your conversation today with the state of the U.S. dollar and where that trend is going. What does it mean for U.S. farmers and Canadian farmers?
Well, typically, when the U.S. dollar is devaluing, as it looks like the trend is doing now, as it has been for the last 50 years, it follows a certain cycle, and we're in that down cycle. It means that U.S. priced agriculture commodities will increase in value as that lens inflates. The problem for Canadian farmers, it's not a problem, but because the Canadian currency will increase, you get less of a benefit here in Canada. You still get a benefit, but the biggest winner in a U.S. dollar devaluation cycle is inflation in U.S.-based prices for U.S. producers.
Yeah. What about that Canadian perspective? Now, what does that mean for Canadians and the Canadian dollar?
Well, it means the Canadian currency is going to strengthen. And yes, we'll still see inflation in Canadian-based prices, but it'll be half as much. And so one thing that one might want to consider is hedging the Canadian dollar risk as a farmer, as a producer, to not let that take as much money away from you based upon what's going on. So that's something that we threw out there today as something to consider, how to manage the Canadian currency risk.
They talked a lot about geopolitics and obviously interest rates. Let's start there. I mean, you talked a lot about the 30-year interest rate cycle.
Yeah, I mean, for whatever reason, we go through this 35-year decline and 35-year rise back and forth based upon a lot of factors. And right now, we've turned up from that 35-year decline into an uptrending cycle. Whenever interest rates or the cost of capital is going up, it increases the cost of farmers. It makes it harder to grow production because it's you just don't have the economics that you used to. Additionally, it makes government balance sheets blow out, meaning that their interest expenses as a percentage of the budget go up, which means they have to print more money, which then leads to more inflation. So it's all part of the inflation cycle. The last one of these was the 1970s, and we know what that one was all about. It was a very inflationary cycle.
I want to talk about markets here. We've been talking about China for so long, and that balloon is sort of deflated somewhat, and I want you to talk a little bit about that, but most of your focus today was on India and the opportunities ahead there. Once maybe we get away from some internal sort of focus on protectionism.
Well, I mean, certainly China's sun is setting, but we don't think it's crashing. Their demographics are very, very poor, which means their workforce coming in is smaller. However, India looks to have the biggest younger group generation workforce to ever come into their prime spending period in history. We're already seeing consumer demand take off. We're already seeing widespread bans on exports. And so we think that India could be everything China was the last 24 years. It could be even greater than that the next 10 to 20 years. So as much as many are thinking demand for agricultural commodities could be soft, we think because of India coming on the scene, replacing China, the situation, at least for the next decade, looks pretty good.
Let's talk weather. A big topic, obviously, everybody's favorite topic. And you said, extreme weather volatility escalation is here to stay for 10 to 15 years. Tell us about it.
The sun goes through a 220 period where the activity of the sun goes down. And when that happens, the atmosphere contracts because of a cooling of the stratosphere, and it takes the upper airflow pattern of the jet stream, and it kind of accentuates it, amplifies it, and we're in that now. And when you get that amplification, weather volatility is crazy. Record cold, record hot, record snow, record floods, and it can happen very, very quickly. And so until the sun goes back to firing up normally again, we're going to be in this escalating weather cycle of volatility. The good news is producers that are proactive are going to have a lot of opportunities to sell, and buyers, livestock producers are going to get a lot of opportunities to buy. So I think as long as you are proactive and instead of reactive, this could be a very prosperous environment for producers.
What about producer strategies, grower strategies? You talk about being proactive rather than reactive. We look at where corn and soybean is now, and to your point, on the next 10 or 15 years, what are the strategies that farmers need to be working for?
Well, certainly, making sure that when the prices are good, like they were for a couple of years, that you take advantage of them. Don't get so caught up in the price that you don't take that money home on the farm. Volatility goes both ways, up and down. So right now, with prices low, livestock producers have an unbelievable opportunity to buy feed. And so I think that's the first thing, is make sure you're going against the grain, no pun intended. I mean, using crop insurance, the crop insurance products continue to expand. I would continue to be thinking about spending more money on insurance than you're accustomed to handle some of these risks on the farm. And obviously, I think I'd be looking, at ways to use, futures and options to manage risks on the farm, especially if the drought is on your back, is in your farm, and you're not sure what you're going to be looking at. Though, doing things on paper can be a good way to not have to commit to cash sales when you're uncertain about your production levels.
Hey, two more topics for you, two of many you talked about this morning. Drought in Brazil and how that is growing, and your take on future impact.
We've seen a 50% decline in the central north, central west Brazil moisture patterns. Normally a rainforest. It's never happened before. We believe that they've deforested 20% of the Amazon. We believe that has ruptured this atmospheric river that made North Brazil the envy of the world's growing food. And if that's the case, then they're going to see a perpetual drought cycle until such time that they stop and maybe allow the rainforest to grow again. So we think that long-term drought cycle in a key, highly productive area of Brazil could be a windfall for North American producers who might be able to sell a lot more of their goods if Brazil hits a stagnant period for their growth, because they've been growing based upon increased acres, not increased yields. And if they can't plant more of the Amazon and have to grow yields, that's going to be a much more difficult thing for them to do, especially if the weather's unfavorable.
Yeah. Last question for you, Shaun, and that is about the short-term impact weather, what you see here out there. You talked about El Nino peaking in 2023, La Nina in 2024. Give us your take on the next 3 years.
Well, we are transitioning from El Nino to La Nina this year. What's going to happen this growing season in North America has everything to do with when La Nina arrives. If it arrives by midsummer, I think we can have an unfavorable growing season, like we've had the last 3 or 4 years, below trend line you'll cross, but not a disaster. If the La Nina arrives early, we could have a much more protracted major crop problem. 2025, however, our work says would be a full-blown La Nina, and some other weather cycles that come into fray could create a much more sinister drought in 25. So our best bet right now is 25 is the year we're really worried about, but 24, we still don't think we're going to be able to produce trendline yields.
Great stuff, Shaun. Hey, appreciate you taking some time here at the March Classic for Real Agriculture.
Thanks for being here, and thanks for the interview. Appreciate it.